everyone, good afternoon. You tuned into Market Fatafat. I'm Ankita Saxena and with me is Nupur Talwar, and together we are going to take you through all the stocks that are in focus at this point, either on the back of news flow or on the back of technical charts. And let's get going with the show and talk about the first earnings candidate, and that's Dabur, that reported an inline set of Q1 results with revenue growing in double digits for the second straight quarter. The management remains optimistic on FY27, guiding for a double-digit revenue growth and better margins. My colleague Ashesha spoke with Mohit Malhotra, who's the CEO of Dabur India, to understand the roadmap ahead. Let's go across and listen in to what he had to say.
Overall, the results have been very positive, looking at the backdrop of a very dynamic macroeconomic volatile environment in West Asia, which was characterized by high inflation, freight issues, supply chain disturbances. I think Dabur has done pretty well, 10.6% revenue growth, backed by domestic growth of almost 10%, 9.5% in the FMCG business, backed by volume growth of 5%, despite taking up price increases of around 4.5%, which came in, inflation of around 6%. Our international business growth has been 15.5%. Middle East, despite war, has grown by 8.6% in INR terms. All our international markets have actually grown by high double-digit growth. So I think the performance all round has been secularly excellent in my view. And we were a little bit impacted by unseasonal rains in the month of April, which impacted our beverage and glucose business. But for April, in May, again, the beverages and glucose have also come back with mid-teens kind of growth. So beverage is also back on track. So overall, pretty happy with the performance, and that's on the top line. As far as the bottom line is concerned, on bottom line also we got accretive bottom line, 15% growth on profitability. Our gross margins have actually expanded by 100 bips in the India business, and overall operating profit is expanded by around 30 bips for us. And the PAT expansion is also there. So all round, I think it's a good performance from any stretch, and it's pretty much in line with our business targets that we've taken as a team of a double-digit growth. So I think it's a good beginning start to the whole year, and the first quarter is to my satisfaction. Thank you.
Okay, so the first quarter has come in line with your expectations, and it's a good start to the year. That's the word coming in. But Mr. Malhotra, we'll talk about the price hikes and the revenue target that you've shared. But before that, let's talk about the international business. Most of those businesses have reported very strong growth. Bangladesh, I was just going through the growth numbers, 34%, with Europe reporting about 28% growth. What led to this solid uptick in your international business, and how much of this is sustainable for the next few quarters?
So we expect the full year international business in a double-digit trajectory, because Middle East situation was quite volatile and which disrupted our supply chain also from the Middle East. And that's why we had to double down on all other businesses which were dollar denominated, also whether it's US or it's a UK business. So all around, I think it's the team has done a great job. I think the brands have done well. Our advertising expenses have actually moved up ahead of the revenue. So 15% is what we've invested on advertising as compared to a 10% growth. E-commerce has been one of the big pivots of growth in international business also. Now contribution around 3 to 4%, which was almost zero last year. So I think that's come up very well. Our Namaste business has grown by around 17%. So it was dollar denominated business. When you translate to Indian currency, because Indian currency depreciated, there's been a translation gain also in international business for us. And that's what has driven the international business. A lot of innovations also happened in international business for us. Overall, I think a good trajectory of growth, and which is seemingly sustainable for the whole year. And we expect a double-digit international business growth. Yeah.
Okay, double-digit international business growth is sustainable for the rest of this year and for the full year FY27. Mr. Malhotra, let's also talk about the consolidated revenue growth guidance that you've reiterated this time around of double-digit growth for FY27 versus FY26. How much of this will be volume-driven, and how much of it will be led by value growth? Can you break it up for us?
it's very difficult to give you exact guidance on the breakup, but I think in FMCG market, any polarized driving growth is not very good. It has to be both a mix of a volume and also value. So now there is a mix coming in because of the inflation. We've taken price increases of 4.5% in the last quarter, and we might have to take another round of price increases. The South Asia war doesn't ebb. So it's a good thing that part is coming out of volume and part is coming out of price. So I expect it to be a 50-50 kind of a thing between volume and the price mix. But it all depends upon what kind of inflation headwinds that we expect. Like in the first quarter, we saw around consolidated inflation of 8%, with India inflation being 6% and international inflation being 12%. In the coming quarter, we are expecting this inflation to actually peak at around 20%. So we might have to take another round of price increase because the brands are so resilient and most of the brands are market leaders in their respective categories. We are able to pass on the price, the inflationary impact to the consumer also. And the impact has got softened. The inflation and the price increase impact got softened because all the prices are lower than the pre-GST levels. Because in the GST, the prices went down because GST rates got down from 18% to around 5%. So there was price cuts which actually happened. So still we are at the lower levels of the pre-GST prices. So that is kind of working in our favor, and the brands are resilient and leadership is there. So we are able to pass on the benefit to the consumers, pass on the price increase, the cost increases to the consumers.
Mr. Malhotra, you did tell us that you've passed on some impact and you took about 4 to 4.5% of price hike in the last quarter. If you can put some numbers into perspective, how much have raw material prices risen by? 4.5% being passed on. What is the balance impact which either the company is bearing or it is likely to be passed on going forward? Can you give the breakup of numbers for us?
See, the total inflation has been around 6%, like I told you. 4.5% has been the price increase, and cost efficiencies and cost cutting measures have also contributed. We've cut a lot of trade duplication, unnecessary consumer promotions have been cut. Cost optimization has actually happened across the value chain in the organization. So 6% inflation and 4.5% and rest 2.5% is actually coming out of cost efficiencies in the company across the value chain. And therefore, you find operating margins actually moving up and gross margins also moving up by around 100 bips. So that's the kind of math, how it's actually broken up.
All right, so that was the Dabur CEO speaking to us on ET Now, talking about the results as well as other things. But we slip into a very short break. On the other side, we're bringing you more. Do stay with us.
Welcome back. You tune into Market Fatafat, and let's talk about all the stocks that are in focus. Syrma SGS is in focus after they reported a strong Q1. Earlier, we spoke to the company's MD, Jasbir Gujral, on whether the management was revising their FY27 guidance. Let's listen into what they had to say.
See, I think we have started off the FY27 on a very strong note, and this gives us the confidence that we'll not only achieve what we have guided, but in all probability will deliver a better performance than the earlier guidance. We are confident of achieving this or delivering even a better performance.
And in fact, we also caught up with Kishore Patil, the CEO of KPIT Tech, after they posted their Q1 earnings to learn more about their margin guidance. Let's hear in what they said.
Incrementally, margins will get better. Incrementally, margins will get better. But as and when we will make a reasonable move towards the margin, because there will be some other levers which we will use, but there will be also some investments which we'll make in some of the new areas. So as and when the margins come back to a normalcy, I think that's when we will get the margins back. And that's what we expect in H2, more towards the latter part of the H2. this will be my my profitability. It is 17.2% right now, and it will incrementally increase as the revenues will come up. I think that will, in line with that, it will go up, is what we have said.
All right, moving on to the next management. V.S. Hariharan, MD and Group CEO, Redington Group, doesn't see a downside from the AI capex point of view. Let's listen in to him as he explains that rationale.
As we look forward, clearly a lot of this is sustainable. The only area of concern for us, because of the price increases on PCs and smartphones, at some point we could see a consumer demand softening. We're already seeing unit growth is flat to single digit. Because of the price increase, we're getting some of the revenue increases. Now, how much can that sustain beyond the next few quarters? We'll just have to wait and see. We want to be able to sustain. That's our goal, to be able to sustain and improve, and on the gross margin side. Clearly, a lot of things at play right now, too many variables at play, but our intention is to continue to grow the gross margin and the EBITDA.
All right, let's talk about the market and how that is shaping up at this point. Well, it is really the large caps that are, you see that some bit of movement coming in on the large cap front. Even though Nifty is right now very sideways, just 1/10% uptick coming in, it is pretty much within previous sessions trading range. Nifty Bank, though, is down 0.3%, so that's not doing much. And even the broader end of the market, even that is trading in the red. Mid cap is down 0.3%, and so are the small caps. But sectorally, let's talk about the sectors. It's Nifty Auto that is leading from the front. We have Exide Industry, Hero Moto, M&M, remember, reported its number. Good set coming in for M&M also. That spike of almost 2% coming in on M&M post the results. So that is really buoying the sentiment as far as the auto pack is concerned. Besides that, we have Nifty IT that is in focus. In fact, it has been trading up for the last 5 consecutive sessions, and it continues to power ahead with gains of 1%. And look at the names like Wipro, that's up in a way 2.5%. Tech M, that's up 2%. Coforge, Infosys, HCL Tech, and Persistent System in that pecking order. In fact, if you look at the Nifty IT index, that alone is up 20% in the last 1 month. So good moves coming in as far as the IT pack is concerned, as we see the entire AI theme that's cooling off, and that is really lending support to these IT names that haven't really moved much. But let's also talk about the other packs. We have Nifty Realty. That's the one that is reeling under pressure. That's down 1.7%. The financial services, like I mentioned, whether it's the banks, the financial services, they're all trading down with cuts of anywhere between 0.5% or thereabouts. Nifty Metal, FMCG in that order are also trading in the red with cuts of 0.2%. But if you look at some of the other names that are buzzing on the back of earnings, we have Redington, of course, that was buzzing on the back of earning. We have Balkrishna Industries, and that was also up 8% in the morning trade. Strong set coming in for Q1 for Balkrishna also. And look at Redington, even that is up in a way 8.5% on account of its earnings. Besides that, look at some of the other names that are buzzing on the back of their earnings. We had Dabur, though it posted inline quarterly performance. We did see the downtick coming in as far as the stock price is concerned. There, it's trading down almost 2% despite posting an inline set for Dabur. But let's also talk about another name that is in focus in the back of its earnings, and that is Piramal Pharma. And to get us a sense of what is the roadmap ahead for the company, we're joined by Nandini Piramal, who's the chairperson of Piramal Pharma, who's now joining us. Hi, good afternoon, Nandini. Thank you so much for joining us today.
Nice to be here.
Nandini, a strong start to the year. The revenue, EBITDA and margins are all well ahead of the expectations. So what would you call out as the biggest swing factor in this quarter?
I think for us is where we are seeing demand up across all 3 of our businesses. It's a broad-based kind of revenue growth. And that revenue growth helps us with operational excellence and execution discipline. It's helped us increase EBITDA by 72% for the quarter. So I think overall we've seen a strong start to the year, and we hope to continue that going forward.
Thank you, Nandini. Meryl D'Souza here also joining in. Your FY27 guidance going in was early to mid-teens revenue growth, and you've already delivered up to 17% in the first quarter alone. Do you now think it is time to revisit that guidance upwards, or there are still reasons to stay cautious here on out?
I think at this point, we'd like to kind of hold to that mid-teens growth, just because, as there is a fair amount of macro volatility out there. So I think I'd like to keep to and over deliver when we get to it. But at this point, we're not revisiting guidance.
Nandini, you'd also said that last quarter that leverage was sitting around 3.6 times net debt to EBITDA, along with a long-term goal of bringing that down to 1%. Can you tell us where does that ratio stand today, given your EBITDA has jumped up so sharply, and also what levels you're targeting for the full year FY27?
Leverage right now is at 3.7 times net debt to EBITDA on a trailing 12 months basis. I think over the year, we'll try and hold it at the max at this level. We did do an acquisition in the first quarter, which was the Kenalog brand from BMS, and that should start delivering revenues with commercial supplies in quarter 2, FY27. And we will continue to spend on CapEx over the year. We're currently expanding our Lexington facility for sterile injectables, as well as we just opened our Riverview suite for ADCs linker payloads, and we expect that to start revenue soon.
All right, got that. But last quarter, you had also taken a 176 crore intangible impairment after stepping back from certain in-development assets. Can you tell us if that chapter is now fully closed, or do you see further write-downs coming ahead?
I think that's done for the foreseeable future.
All right, thank you for that. Now, switching focus to the Middle East situation, you had flagged that cost escalations were seen across sourcing, logistics, as well as working capital. Can you tell us how the cost pressure has materialized in this quarter, and what's that situation like on ground?
I'd say overall, I think we have seen, petrol prices, solvent prices, and plastic prices kind of inching upwards, and that's something that we have to continue to do to manage and continue to stay agile and manage that.
Got it. That's the take on the Middle East crisis. But Kenalog Supplies, that's an important growth driver for you coming forward as well, starting in the second quarter. How much of that integration complexity that you'd flagged earlier is now behind you, and when should we expect this to start becoming margin accretive?
It will become margin accretive already by next quarter. Integration is going to take time. It is a market by market, both regulatory marketing authorization changes and as well as a manufacturing transition that will happen. So it will be a more long-term integration overall, but we expect commercial supplies to start and revenues to show up in quarter 2.
All right, so margin accretive from the get-go is what we're getting. Nandini, speak to us about your consumer health e-commerce segment as well. That one's grown about 40% and is now contributing up to almost 30% of sales as of the first quarter. Tell us, at what point does this channel mix start shifting meaningfully and start showing up in your margins quite meaningfully?
So I think our consumer products has been doing very well quarter on quarter. Our power brands actually grew 23% over the last few years. We've been strengthening distribution both online and offline, and we're expecting to see an improvement in profitability across the PCH business, that continues. So it is single-digit profitability, but we're going to continue to focus on increasing that, and you'll see a slow improvement in profitability that will happen.
All right, that's the take coming in on your consumer health business as well. Nandini, thank you so much for joining us here at ET Now and speaking to us about your first quarter performance.
Great, thank you so much.
Right, that was the take coming in on Piramal Pharma, reporting quite good numbers, but Mahindra and Mahindra is also in focus. The presser is ongoing right now. Let's switch into some live visuals from that front right now.
Going forward, continued momentum on large deals, diversification geographically, and reducing the margin gap to peers will be the story for TechM. Some of our growth gems, our real estate business, Mahindra Lifespaces, a very robust addition of gross value, which is GDV 5.6 thousand crores, up 60%. Residential pre-sales at 925 crores, up 2x. We've had multiple occupation certificates delivered before time. And as we look at this business, it's poised for very strong growth. It's a business that's executing at a very sharp level right now. We are looking at GDV up from 8,000 crores that we had only 3 years ago to 50,000 crores. This is the basic asset for future growth, the land that was required for future growth in this business. And that's at a very strong level right now. We've got multiple large mixed-use projects, each at 5,000 crore plus of GDV. And we're expanding our industrial portfolio. So that's positioning life spaces very strongly right now. Our logistics business is great to see a quarter as strong as this. 14 crores from an M&M standpoint, 25 crores at the business level. And we've gone through a few challenging years. And the business leadership team has put in a very strong performance to be able to show outcomes that put logistics back on track, and a business that we feel very strongly about in terms of its potential. So we're starting to see that potential play out with revenue, with margin, and the highest ever quarterly PAT performance. I generally don't like saying highest ever because I expect every business to be highest ever every quarter. So it would just be too much if we keep saying it every quarter. But in this case, given we've gone through a few challenges over the last few years, it's one thing that we are pointing out. From a future growth standpoint, continued growth in logistics. The industry is one that will grow at a very rapid pace. Express business is turning around well, and our operating effectiveness is at a much, much higher level. And that's really going to drive growth for logistics. Our truck and bus business, and you've seen our announcement on the merger of Mahindra's truck and bus business with SML. It's one that we feel will give tremendous synergies and really unlock the potential of this business. It is a business that we feel will start challenging some of the larger players in this industry. And with the strength that we bring in, also the strength from our auto team, this is one business that we feel very, very good about. And these synergies will help the business only do better. Aerostructures. This is a business that I would refer to as one of our tiny businesses a few years ago. I can't say that anymore. This business has got $1.2 billion of deals in a fairly short time frame. Last year alone, $621 million of deals. And this only continues. We're starting to see a further presence in what we call shell and skins. We're starting to see an acceleration of industrialization of key projects. We've got multiple large orders from various OEMs, and that's really starting to place this business as a key business globally, not just in India, in its space. So going forward, we're moving further up the aero value chain, diversifying the customer base, and we will look at strategic acquisition in this space as well. That will make this business even stronger. So it's really a story this quarter about all our businesses coming in and driving growth, and that makes a tough quarter easier in terms of its results. Let's talk a little about AI. We started talking about this for the first time last quarter, and this is the page that we had shown last quarter in terms of our ambition to be a tech leader in every industry we play in. Our approach around deploy AI, transform processes and businesses with AI, and invent AI native ways in certain businesses.
Well, Anisha, talking about the growth that M&M is seeing, of course, also saying that they are significantly focused at this point on the logistics business. We slip into a very short break. On the other side, we'll be coming back and taking you through those details, so do stay with us.